Hey, what's up everyone? My name is Ali. Welcome back to my world of stocks and welcome back to my 3 stocks on sale series for the coming month here in November 2024, where in each episode I pick 3 new stocks that I feel look attractive at today's prices for the long term. And to make it a little more fun and interesting, I specifically choose one lower risk, one medium risk, and one higher risk option for some added variety. As always though, please remember to do your own research and make your own decisions. But if you're enjoying the channel, then please consider supporting me on Patreon. Link is in the description, where you also get access to our community Discord, where I post a new stock purchase every single day. It's a ton of fun, and I would love to interact with you on there too. But thank you regardless for any support, because I couldn't do this without you guys. So thank you so much just for watching my videos. All right, now I can't wait to share this month's picks with you. So let's just go ahead and jump straight into it. And we'll be starting first here with the lowest risk option, stock number 1. And this month, I'm going with what was actually my newest addition into my own portfolio recently, and that is a REIT known as Vici Properties, ticker symbol VICI, which by the way, it also won our poll on Discord, so I added it to our community portfolio as well. But yeah, this one to me looks very solid long term, and there's really 3 primary reasons why I like this stock so much. Number 1, the strength of the business, because not only is this an absolute leader in real estate, but it's in a specific area of real estate that I just feel is more strongly insulated from an evolving market, and that's in high quality gaming and entertainment properties, where Vici's portfolio currently holds much of the Vegas Strip, including MGM Grand, the Venetian, Mandalay Bay, Caesars Palace, and more, as well as other giant properties across 26 states around the country. The reason why this matters is because while other types of real estate are much more, I would say, vulnerable to rising disruption, like brick and mortar retail with e-commerce or offices with remote work, well, I just don't see that same type of vulnerability with gaming and entertainment. Those are still largely in-person markets. I mean, you go to any local casino or entertainment event, you're going to see that their business is very much booming these days. And it's really why Vici's funds from operations continue to rise, which easily covers their dividend payout as well. And you can see that right here. And even during the height of the pandemic in 2020, mind you, there was a period that the Vegas Strip was even largely closed down, and yet Vici was one of the few REITs to actually still bring in 100% of their rent during the entire time, which shows you just how high quality their properties really are. And yet, reason number 2, the stock price is actually not anything crazy high. I mean, you would think that with that kind of performance, the stock would have skyrocketed, but in fact, it's only up less than 40% in the past 5 years, and less than 80% since IPOing back in 2018. Considering the high dividend, I'd actually expect the stock price to be much higher than this, which is reason number 3, the mouth-watering dividend yield that is well above 5%. By the way, they've increased that dividend too every year since they started paying it, and considering how well covered it is, it'll likely grow larger still over time too. My guess though for why the stock hasn't shot up too much over the years is partly due to rising interest rates making bonds more attractive, but now that we're entering a lowering rate environment, I actually think dividend stocks will become more important over time, so I plan to load up on them while I still can, and Vici definitely be playing a role there for me in my portfolio. All right, moving on to stock number 2. This will be the medium risk option. For this one, I'm going with what is another big time favorite dividend stock of mine that I think is trading at a dirt cheap price, and that is the telecom giant Verizon, ticker symbol VZ, which admittedly does have some major flaws and issues to be aware of, the biggest of which is clearly the massive debt that they've accumulated during the investment and build out of their 5G and fiber networks in recent years at over $126 billion of debt last quarter alone. Now, that debt has been slowly improving over time, and it's also an issue that really AT&T and even T-Mobile are also facing as well, what basically makes up like the triopoly of the American telecom market. But it's still a massive amount of debt that we're talking about here that will need to be serviced over time, making it a major drag on their financials and thus adding just a lot of bloat and even some risk to Verizon stock. But beyond that, the picture does actually start to look better for Verizon. Because first of all, this is a cash generating machine here that should be able to service that debt with the billions that they generate every year. In fact, just breaking the numbers down a little, we can see that so far this year, the first 3 quarters of 2024, they brought in $26.5 billion in cash flow from operations. Now you subtract $12 billion from that for capital expenditures, and you're left with $14.5 billion in free cash flow, of which you deduct another $8.4 billion in dividends paid, and you're still left with over $6 billion for servicing debt. So in my opinion, it would appear at least that the dividend is relatively safe here, and that's a huge bonus because compared to the others, Verizon's yield is much higher at about 6.5%. It's a very attractive yield even just across the entire market. Now, the other 2 reasons why I like the stock here, well, the valuation is also cheaper than their peers by forward PE ratio and over 30% cheaper than the sector median too. It's very attractive. While overall, Verizon is the one that actually has the larger, stronger business, in my opinion, doing more in sales and consistently beating everyone else on network quality, something that they've achieved for over 3 decades in a row, which is kind of mind-blowing. Plus, you even have some new moves recently, like acquiring Frontier Communications to increase their fiber network and strengthen their overall business even further. By the way, fiber is still a huge deal for current and expanding internet usage, so it's not something to be sleeping on here. Many times, even in wireless, the cell towers are actually connected with fiber too. But again, the biggest concern here remains the massive debt, which is why it can be really, I would say, so kind of difficult to value Verizon stock sometimes, because it really is a bit of a wild card. It kind of fits perfectly into that middle medium risk option of a stock, because I see 2 possible scenarios for Verizon going forward. Just in my opinion, the bullish scenario is that interest rates keep falling, making their debt more manageable and the dividend more attractive compared to bonds. So investor money starts pouring in, raising the stock price and lowering the yield for new investors. But of course, because I entered the stock early on, my yield would actually stay high. And that's kind of the bull scenario where I not only have a really good dividend, but I also get a rising stock price over time. But then the bear case is also very possible here, because in that scenario, well, the debt just keeps weighing on the company, which gets even worse after the Frontier acquisition if that doesn't provide enough synergies or growth to make up for it. And if the economy happens to get worse or we even hit a recession, well, Verizon could easily decide to cut that dividend in order to save themselves as much money as possible during difficult times, which would likely cause investors to flee the stock. Again, personally, I believe more in the former scenario, so that's why I'm buying the stock right now myself. But like I said, it does carry some possible risks too that investors should be aware of if you're even considering this stock. All right. Now, as risky as you might think that Verizon is, well, it's not even the highest risk option that I chose for this month. I went a little heavier on the risk side this month, admittedly. But yeah, that honor is going to go to a stock that I don't even own myself, and it's one that I've actually rarely ever talked about on the channel. But at these lower levels, it's just getting super interesting the more that it crashes. So I felt like I kind of had to choose it to talk about it. And that stock is Boeing, ticker symbol BA, the aerospace and defense giant. Now, back in the day, this was easily considered low risk. No way that you would have thought it to be a risky type of stock. It was one of the best performing companies in the world, and the stock price reflected that, rising to nearly $500 a share. However, today, the price has fallen all the way down to just around $150, losing well over half of its entire value and essentially trading for just about the same price it did an entire decade ago. Now, there's 2 primary reasons for this. One reason that I feel really no longer matters, and the other reason I think is much more important. Now, starting with the former reason, that would be the pandemic, where most of the world shut down, causing air travel to come to a screeching halt, as you can see on this chart here, where airlines were even at risk of going out of business before the government stepped in to bail them out with taxpayer money. By the way, some of that even went to helping Boeing as well, because of course, during that time, their business was heavily struggling and affected by all of this. However, that's no longer the case here today in terms of travel demand, which you can see on this chart here has already recovered back up to a record high and is only expected to grow larger long term. So the whole pandemic period, that's not an issue that I'm concerned about anymore moving forward when looking at Boeing stock. The other issue, though, the one that I actually do think is important that everyone should be paying attention to, makes the stock high risk, is in the numerous quality control issues that Boeing has faced in recent years, some of which has even tragically been fatal to a lot of people. And it's something that Boeing has been having to deal with ever since, not just PR-wise, but also in the form of lawsuits and even product delays. Plus, you even have a labor dispute more recently, now making things even worse. Now, moving forward, I personally think that much of this will improve for Boeing over time, which is why I think the stock is looking attractive here. But at the moment, the sum of all these negative parts have actually caused Boeing to lose a ton of money on the bottom line, which you can see on this chart here, showing their free cash flow, excuse me, struggling, while their debt continues to grow larger. Now, on the more kind of bullish side of things, there are some future catalysts to look forward to that should help Boeing turn things around over time, which Wall Street seems to believe in as they project cash flows to actually turn positive once again, with lowering their debt in the coming years as well. And when looking at what those positives could be, well, for one, they do have a new CEO that is actually pretty well respected and seems to be committed to turning Boeing around as a company. But more importantly, Boeing's market share, while having lost admittedly ground to Airbus in recent years, it is still extremely large for them. This is pretty much a global duopoly that we're talking about here with Airbus and Boeing. Airbus really doing better internationally, especially in Europe, while Boeing, I believe, still is like #1 in America. So they do a lot better domestically too. But either way, those two companies, it's essentially a duopoly here. There's not a whole lot of other companies that could even rival them. There is Comac coming out of China. They're trying to enter more international markets, but that's a Chinese state-run company, which, you know, it could do better over time. But in terms of, like, I don't know, consumers trusting a Chinese-built plane, feeling like that's safer than Boeing, even with all the issues that Boeing has had, it's a little hard for me to believe that consumers would trust a planes being built in China. But I don't know, that may be just kind of my biased opinion. Who knows? It's something to kind of keep an eye on longer term. But either way, though, like I said, at least at the moment, Boeing is still very dominant here. And they also have a record backlog to also look forward to in the future, currently sitting at over 6,000 orders and potentially worth hundreds of billions of dollars. And so when I look at Boeing, I just really see like a struggling stock right now, for very good reason, mind you, and I haven't even purchased this one myself. But a big part of me does feel like this is more of a timing issue for Boeing stock than anything else, where maybe given enough time, you know, I could see a recovery taking place for what is still a market leader, a very dominant player in aviation, and one that also even has a big presence in defense too, that gives their business a little more diversity as well. So, you know, I just think as a high risk option, acknowledging that, knowing the risk involved, well, Boeing is probably one of the best high risk options out there in the market. If you're looking for a little bit riskier, more speculative kind of play, it looks pretty attractive the more that it falls. But hey, what do you guys think? I'd love to hear your thoughts down below in the comment section. Do you like this month's picks? Is there any stocks that you think I should have had instead? Let me know down there. Let me know what you're buying. I may include them in future videos. But yeah, thanks again for all your support, my friends. Thank you for stopping by. I hope you're all doing well, and I will catch you in the next one. All right, take care, everybody. Bye-bye.